Wanted to show you what I use for scanning. I don't use this for placing trades, although I believe they do have a brokerage side of the firm. Not sure how it works. Anyway, it's great software for scans and looking at what stocks are in what sectors and such. So these are scans that I've made and looking for stocks that are gapping down more than 1%, gapping up more than 1%, and I can sort them by such, and then looking for stocks where the close is above the open, close is above yesterday's close, gapping above red bars, gapping above the prior high bar, and it's the opposite for the sell setups. And down here it just zeroes in a little further, and it's gapping below the low. URI here was a setup on this particular day, and what I wanted to show you about this particular setup is how it lined up with the market. I've already explained the use of the moving averages on the 5-minute chart. The fact that they lined up isn't really something of all that much significance. I wouldn't look at it from the point of view of it being resistance. But as this came up here, of course, what you want to look at is to see if it's into an area of price resistance. And there really isn't anything here because of the way it dropped. That being said, if you look at the timing of the turn is what's significant, in that on this particular day, the NASDAQ 100, the ETF, the Qs had gapped down. They were weak earlier in the morning, and then they were retesting the prior high, this M top, and at the same time, URI was coming up into this area of these clustered moving averages, and it had gapped down on this day under this green bar. Here is the hourly chart, and there wasn't a big void. What I want you to take away is the fact that it was a nice setup as far, as the intraday and the gap under this area, which this consolidation here certainly looked like it was going to go higher. The main point is the fact that the Qs here were forming an M top, and the timing of the reversal here was perfect as it was aligned with the market. On this setup, it was a nice move up. It was showing relative strength. You can see the gap above this consolidation, which was bullish. And this, I can't expand this on, well, maybe I can. When I have to push this here, make it a little clearer to see the setup here, which was right here as it consolidated. Let's look at where the market was. It was beginning to turn up at that point. I don't know what was to the left. However, the market was turning up, and NTAP was showing relative strength. Here's where it opened up. This line shows the opening price on that day, and then it moved up from here. It was a little bit of a choppy move, but the market was in question at that time, and look at where it topped out. You can see the lines right there. When that M top set up, that's where NTOP stalled and started to retrace back down again. So some days just the weakness in the market will drag down even what is showing relative strength out of a bullish pattern like this. Now that isn't going to negate what's happened here from a longer term point of view. This is still very bullish, and a consolidation gapping out of an area of resistance. And so we then would look at, I'd want to look at the higher time frame and see if there's any resistance there. And this has got room to go higher. Now, gaps are going to be a starting point, obviously, for our gap trades, but we can find opportunities from a longer term perspective from these gaps as well. In this example, we don't really have a shock. However, the gap down was clearing this support area, this retest of this support right here. And that was bearish, and it had a void. This is the same day that we're looking at. And a little later in the morning, this stock was setting up with an M top, with the market setting up with an M top as well. And let's look at the spiders here to see what they were looking at. This was making a higher high. You can see I drew this out. I was actually doing a live trading class with students of the options class at that time. And the gap down that morning, which was bearish. It was amazing that the markets actually recovered like they had, but they are in an uptrend and have been in a bullish trend there, and buyers eventually stepped up at an area of support, which was right down here. But what we were looking at and what I explained at that time was the fact that a higher high, a higher low, and a higher high right into this area is exactly where it should turn back down, after rallying from the gap down right into this resistance, and it played out perfectly at that point. I certainly didn't expect it to rally this far, but the entry point right here was perfect, and Alcoa retesting the prior swing high at that time was a perfect entry point for a short. So there's a few examples as to what happened on this day, and here are as I said, the scans that I look for each day, and starting out with percentage gaps, and I usually look at what's gapping the biggest. And here, this stock gapped up on earnings. It was a big gap. They're starting points, and the thinking most of the time by many is that gaps are to be faded, and if you are trading the equity futures, that often can be the case. But with stocks, especially with the criteria that we've set up to look for, the gaps, for the most part, are going to go with the direction of the gap. And this one just exploded as it went higher and held up extremely well in the face of a weak market. So looking for the stocks that are gapping the most, and then from there I start going through them, putting together what you've learned and what the market is doing. And not every stock that is gapping is going to present an opportunity. Here was one, Macy's, that gapped up, a professional gap up after a move down, an extended move down. So I would not have expected it to move this far, but it was a shock type of a gap, and the entry point was great right here into the gap fill. So in the future, I will do more of these and be sending them to you as a student to reinforce what you've learned. I hope this is helpful to see this. I'll be sending more. Any questions, you're always welcome to email me, of course, and please provide feedback on the course and how you're doing with what you've learned in the future.